What does
Yeah.
it mean when you are planning for a business exit? You want to maximize what you're going to get out of it, minimize taxes. What's your strategy for people and all that?
Yeah. So I think in this case, as with many cases, the answer is it depends. It really depends on your situation, the scenario, and there's a lot of things that go into play when you're talking about a business exit. And so, for number one, you've got to have a good time frame. We like to have some runway time between that moment where you decide you want to sell and then when that event should occur. And ideally 5 years is a good runway time, because then we can start to really, we say, flip the switch on minimizing taxes and kind of being tax efficient. And now we're kind of getting into business valuation mode. How do we make this business more attractive to somebody that may want to come in and buy it? And so having that good 5 year runway helps us change things a little bit. And that's going to mean you're going to have a period of time where you're going to pay more taxes, because you want to show more profitability. Because if I'm looking at two businesses side by side as somebody that wants to buy a business, I'm going to look at one that shows low profits versus one that's, has higher profits. Which one am I going to go to? I'm going to go to one with more profits, right? So making your business attractive from a profitability standpoint is important. The other thing you have to consider is, as a business owner, do you have things set up internally so that you can pull yourself out of that business and then drop somebody else in, and the business doesn't miss a beat? And so that's what we call making the business owner independent. And if the more you can get to that stage where the business kind of runs on autopilot, the easier it's going to be to transact, and the better opportunity that you're going to have to get a premium for the sale of that. Now, another thing that's going to be important to consider is, when you sell the business, you can't just say, walk away and you're done, right? In a lot of cases, your business is built on you being part of it. And so your clients are used to that. They want to know that, hey, if Mark is gone from the business, that the business is still going to take care of me in the way that Mark did. And so there may be a transitional period where you have to stay on as a business owner to help, introduce the clients to a new owner and make that transition. So that could be a period of a year, could be a period of multiple years. And so when you're thinking about, your exit, you have to factor in, what's that stay on period. And is that going to be a time where I'm going to be happy, doing it, working for somebody else effectively, because you've sold the business to them and you've got to kind of do things under a new regime. But then you also got to make it worthwhile, because otherwise somebody's not going to be really willing to pay you for your business if they don't think it can continue. I mean, the transaction is predicated on this business continuing to do what it does, and you have to make some assurances that it will, when you're not involved or less involved, or as you're exiting. A final thing to consider is deal structure. Lots of different ways to set it up. Do you get all your money up front, or to minimize taxes, maybe you want to take an installment agreement and take that sale price over time. And in doing that, you don't have this big chunk of money that you have to pay in taxes in the year that you get a good chunk of the money, and that might push you into a higher tax bracket. So, there's things that we need to consider about the timing of when you receive your payments. And then in addition to that, there's different types of sales that you can do. You can sell the stock of your company, you can sell the assets of your company. And so a lot of that goes into the planning. So, again, it's important to have a lot of runway time to think about all these things, have a good discussion with us as your advisor, so that we can start to map it out and come to the best result for you.
So let's talk a little bit about those buy and sell agreements that you were talking about and their importance. And we
Yeah.
know that it protects businesses from, unexpected owner exits and
Yeah.
disputes and that kind of thing. What is your advice for somebody who's going through this
Yeah.
and they're getting ready to put together an agreement?
Yep.
There's some personalities involved. Do you ever see things work out well, maybe not so well?
Well, I've seen both, and I've even experienced both in my own buying of practices and so on and so forth. Um, so when we were talking earlier about selling your business to somebody else, and this is to somebody that might be not an insider or might not be a partner, that's different because you're talking about a transaction that you're going to structure and put together. When we talk about these things called buy-sell agreements, that's kind of a what-if scenario. So if you own a business with multiple partners or owners, it's imperative that you have a buy-sell agreement in place. And what the buy-sell agreement does for you is it just dictates the terms